Hey guys, how's it going? We're here for another podcast. I feel like we both look very handsome today. Handsome.
You look very handsome.
Thank you. Thank you. I'm wearing my Connect shirt. Today we're going to be talking about things just in general that make interest rates go up and down. Because Marcus always talks about like, well, obviously this happened today, so this is going to happen. And it's not quite obvious to me, and I don't think it's quite obvious to a lot of people. We're just dealing with a super genius here. So
listen, I am definitely not a super genius. I think this is a good idea though. Like I liked when you brought this up about what impacts interest rates, right? Anyways, yeah, I think it will be like there are so many different things happening right now specifically, but always, right? An economy is always impacted by a whole bunch of different events, variables, I don't know, whatever you want to call them.
Yeah.
That are tugging at it one way or another.
Right.
We don't operate in a vacuum. So how will each of these things impact us? It's good. I like it.
Yeah. So, I mean, I went around the office and wrote a couple things that are currently happening in the market down that people had kind of brought up. And maybe we can just go through them. Or I can start with a couple and then you'll just start to riff and tell us all about what changes the interest rates.
Sure.
I'm going to start with number one.
Just why don't you just say, what's the thing that you want to know about? I don't know if you realize this, but before we started working together, when I was just a lonely mortgage broker with, 15 other people who were very productive and probably much better than you. No, I'm just kidding. Just kidding. A lot of them still working at Connect. But I used to do every Friday, I used to do like a pseudo news spot on CP24 live from the TSX at the closing bell. And they just wanted like commentary on like what was happening. But I turned it into what has happened in the market this week is going to impact your mortgage.
Right.
And Matt, I don't know if you can find, there are some funny clips of like me.
Welcome back with a closer look at today's business news and headlines. We go live now to the TMX Broadcast Center to Marcus Severus, founder and economist with Morcan Direct. Hi, Marcus.
Hey, Pooja, how are you?
So my question is, do you think that Kid Rock shooting a couple 2-4s of Bud Light is going to affect interest rates?
Okay. All right. Let's unpack it.
Okay.
You were talking
I was just joking. I was going to skip.
Right?
Yeah. I was going to
I haven't seen
continue on.
I haven't seen it. It's a TV commercial or no?
No, it's not a TV. It might as well be.
Right. No impact.
No impact. Okay. My actual question, Trump getting arrested or Trump getting indicted. Like, do you think that this is going to have an impact on interest rates somehow, some way?
All right. But now we're just kind of having fun with it. But I will say,
I'm not having fun with it.
You could play this out a few ways. Okay.
Okay.
If you believe Trump being arrested will lead to him becoming president, which a lot of people think.
And you think that that's actually possible?
Oh, for sure. I think that so hear me out here. Okay.
Okay.
I think that there are so many Republicans that are so disillusioned with what's happening in the United States that it will strengthen Donald Trump. This whole process will strengthen Donald Trump. Like, look what he has to say now. Okay. I just got charged criminally with paying a porn star $130,000. It sounds funny even to say it.
Yeah.
He paid a porn star $130,000 of hush money.
And some other like
2 porn stars.
Yeah. One was a model.
Yeah. Who cares, right? But like the fact that they probably spent $100 million to come after him for this so that they could charge him criminally and prosecute him, to embarrass him, so that in their minds, they thought like, oh, he won't run now for president and it'll scare him off or it'll make people not want to vote for him. The people that were backing Donald Trump are still going to back Donald Trump. It may galvanize them behind Donald Trump now.
Right.
And even some of the people that are Democrats that see what's happening are going to be like, okay, now we're using this platform to chase after him and we're spending this money on a case that's going to go nowhere. Like if he gets charged criminally, he's not going to jail. Like this charge doesn't hold with it the teeth to imprison him.
Right.
Anyways, so what do I think is going to happen? Yeah, I think it's probably good for Donald Trump.
Right.
Like, he's going to make a spectacle of this, as he always does, and in the end, it's going to end up strengthening his campaign. And does he wind up in the White House? So if Donald Trump is in the White House, I think he probably exerts, although they say it's impossible, I think he exerts some sort of pressure on the Federal Reserve and the markets, whereby the markets will probably go up and rates may stay higher for a longer period of time, unless he exerts the influence on the Federal Reserve, which he's not supposed to, in which case maybe he can influence them to go a little bit lower. But I think that generally speaking, a Republican in the White House would lead to a stronger economy, less government spending.
Right.
Kind of the same thing here as we would see if like a conservative government came in and took over from the liberal government and the massive amount of spending that they just proposed in their last budget.
Right.
Which we can talk about too. But answer your question. If Donald Trump, if Donald Trump's court case manages to get him elected, which I do,
which is crazy,
which I think is possible, then look out, baby. The economy should do better.
And the war in Russia would be over.
Yeah, because he can solve it, he said, with one trip. One trip or one?
I don't know.
He could solve it with
He says a lot of things.
Yeah.
He says a lot of things. What a wild guy.
But honestly, it's really not that. Like, the election isn't going to be that. It's not going to impact rates. Rates are kind of already on their trajectory.
Right.
But if we were going to say where it would slant, I think rates might go down a little bit faster if it was the Democrats, because then the economy would look weaker sooner, which would cause the Federal Reserve to loosen policy faster. And if it was the Republicans, unless Trump was able to exert kind of some type of control over the Federal Reserve, which he's not supposed to be able to, then I think you would see rates stay higher for a little longer. But I'm not sure that either of those eventualities will have enough influence to kind of counteract or even make or create an effect on the economy when there are so many other like right now, the Federal Reserve is concerned about labor markets and inflation.
Right.
I don't know that the outcome of the federal election would be so significant as to overcome how powerful those levers on the economy are already.
Mm-hmm.
I think in like a normal economic environment, it might, but I don't think in this one it does.
Okay, that brings me.
Do you understand what I'm saying?
Yes.
Just like, so it's in such upheaval right now that the federal election probably probably has a very muted effect.
Right. Okay, that brings me to my next thing, because you were talking about the job markets and stuff like that. I think Canada just added a whole bunch of jobs recently, right?
It was consistent. I think it was kind of like pretty close to what they wanted. It was maintained unemployment rate at 5%.
Right.
But it's like a good job market.
Right.
Yeah.
Right. So would that have any effect?
Up.
Yeah, up. That's an up.
Again, because there's so much else going on right now.
Right.
In a vacuum, we should preface it by saying, like, in a vacuum, this is the impact that each of these events has.
Right.
When a job market is strong or too strong, the government of Canada, the Bank of Canada or the Federal Reserve or whatever the kind of central bank governing body is, will want to slow the economy down. And how do you slow an economy down? You increase interest rates.
Right.
And if employment is overutilized, like if you can't get workers and it's slowing the economy down, that's also a really bad thing.
Right.
The central bank doesn't want to see that.
Right.
So increase interest rates. Good job numbers, increase interest rates.
Right.
Typically.
Right. Saudi oil output.
I
don't think it was just the Saudis that said that.
OPEC.
Yeah.
Yeah. So
what is OPEC?
It's the oil producing nations.
Right.
There's OPEC and then there's OPEC plus, right?
Ooh.
Yeah. So like within OPEC, it's like
It's like an economy and a premium economy.
No, it's like G7 nations and G20 nations.
Right.
Like OPEC is like an original body of a group of countries.
It is Qatar, Indonesia, Libya, UAE, Algeria, Nigeria, Ecuador, Gabon, Angola, Ecuador, Guinea, and Congo.
Ecuador's in there twice.
Equatorial Guinea.
Oh,
There's a lot of countries on there that like.
they're all giving the middle finger to everybody.
Yeah.
Well, that is something else, right? That is a factor of what happens when your environment and energy policy in a country starts affecting your foreign policy. Because we don't want to have a pipeline and drill oil in Canada.
Right.
It's dirty and yucky, and it's going to make people angry, and it's going to pollute the environment. We're not going to do that. Well, guess what? Someone else is going to do that.
Yeah.
And it's going to make them a lot of money, and it's going to strengthen their leadership, and they're going to do things you don't like. And there's going to be human rights violations. And when you send reporters there, they're going to kill them.
Yeah.
And they're going to start wars, and they're going to try to take over more countries because they think they're strong and they have lots of money. And then you're going to have to stop them. You're going to have to send people there, and those people are going to have to die to stop them because it's going to be a war. But you know what? Good job. No pipeline. Right? Congrats.
That was a bit of a mic drop.
Anyways, okay.
I mean, that guy, Pierre whatever his
Paul
name is, seems to be pretty excited to get the pipeline pumping again.
Everybody should be.
Yeah.
It doesn't make sense not to have that. It's all political pivoting based on what the populace wants, right?
Frack
what do you,
me, baby,
what do you think you can convince people of?
Yeah.
And okay, let's swing in that direction.
Yeah.
Anyways, you said what happens when OPEC reduces oil production, which is what we saw happen this week. The Saudis came out and they said, you know what? We're cutting production 5%. Nobody really expected it.
Mm-hmm.
Russia wanted it, right?
Mm-hmm.
Because they want the price of oil to go up.
Right.
And because they want to inflict pain on the Americans, right? Because it will be more difficult to fight inflation with higher energy prices.
Right.
Oil goes up, inflation goes up.
Right.
Inflation goes up. What else has to go up, Justin?
Rates.
Bingo. This will likely not cause interest rates to go up, but it will cause pain for the American, Canadian consumer, G7 consumers.
Mm-hmm.
The thing you got to remember here is like Putin went in to the Ukraine over a year ago now. And the idea was everybody was like, oh no, Europe will not be able to survive the winter because of how reliant they are on Russia's natural gas.
Right.
But guess what? Europe got through the winter.
They got through it.
The winter passed, you know?
Yeah, they got through it.
Yeah.
All right. So oil prices potentially up.
Oil prices are going up.
No. I'm saying oil prices equal interest rates potentially up.
Would honestly, in almost all circumstances, if done over an extended period of time, would cause inflation, which would, force you to increase rates.
Right.
So the Saudis and OPEC literally are doing it on purpose to try to impact the economy in the United States, right? Like they're doing it to inflict pain.
Right. And and the Saudis and Russia, do you think, are they like,
oh, buddy?
Yeah.
Honestly, the amount of buddy going on right now between China, Saudi Arabia, and Russia is at an all-time high. It's like interest rates all-time highs, buddy all-time highs.
Right.
Yeah. The BRICS, Brazil, Russia, India, China.
Brazil's in there.
Brazil, it's just the BRICS. Yeah.
Right.
A guy named James O'Neill, I think, coined it, who was like the chairman of Goldman Sachs. Jim O'Neill.
I couldn't see Brazil sitting at the same lunch table as Russia and China.
Hey, Brazil is a big country, lots of resources.
No, for sure. I'm just saying.
I don't even think in the meeting, though, Lula, who's the new president or prime minister?
Okay.
of Brazil. I don't even think he went to the meeting. I think
Or speaks or is able to like even have
No. He speaks. He has a raspy voice.
No, I know he probably speaks, but you know, he's at the big table. Like that's a big table, right?
Yeah, Brazil, India, China, and who's the S?
The list of those countries are Russia, India, Brazil, and South Africa.
South Africa.
Oh,
Okay.
Ooh, South Africa.
I mean, listen, that's the one at the, like Brazil's fine at that table. South Africa's kind of like, what are you guys doing here?
yeah.
But again, tons of natural resources. So Brazil's president or prime minister, Lula da Silva. So this guy was in jail. They put him in
Really?
jail for corruption when Bolsonaro was the president or prime minister of president of Brazil. So Bolsonaro was the president. The other guy was in jail. The other guy came out of jail, went against Bolsonaro, won.
Wow.
And then Bolsonaro now is forever in my mind, burnt into my mind, as sitting at a Kentucky Fried Chicken in Miami, eating fried chicken by himself. Have you seen that picture?
No.
Poor guy.
So what? He's just like he's ousted from Brazil now.
He went to Miami after the election. He didn't want to be there for the inauguration for the other guy. Anyways, the point of what I was saying is those countries are kind of really growing together, right? With an aim towards creating a currency that so they're not as heavily reliant on the US dollar. The one thing that I read while I was away, this has got to be a month ago now, is that China brokered a peace deal between Iran and Saudi Arabia. When I read that, I was like, oh man, like,
Yeah.
because the Chinese typically had a foreign policy position. This is before they're kind of like, what is it called? Like belts and bricks or bricks and roads initiative. Anyways,
Trying to rebuild the Silk Road, right?
yes. So before that,
The Zuckerberg Road?
No, the Silk Road. Silk Road.
Suck Road. Oh, Silk
Silk.
Road.
Zuckerberg Road.
He heard Suck Road was about to book a vacation.
yeah. I was like, sign me up. Oh boy.
Okay. The Chinese. It's honestly my practice for the show is trying to explain world politics to my kids, because it's like Oscar gets it and then Justin will get it. So the Chinese previously had like kind of like a hands-off approach to the world, right? They were like, let's just stay quiet in our corner and do our thing and grow and get bigger. Then they had a program where they would lend money to these countries, developing countries, and instead of like the World Bank or the International Monetary Fund doing it, the Chinese were doing it. They would lend money into the countries to build things in those countries, always with an aim towards getting resources out of the country. So you saw this happen in Africa a lot. However, now they are in, and that didn't fully work out, right? So those loans couldn't be repaid back. Now the Chinese are back in those countries, but now they're lending money to the central banks in those countries to prop up the companies and economies in those countries so that their loans can be repaid. So basically lending more money to the country
So they can cycle
to help
through.
the country repay the loans that they were going to default on. It's a bad situation. But
Yeah, it seems a bit.
the other thing the Chinese are doing is they're getting more involved in geopolitical issues and brokering a peace deal with Iran and Saudi Arabia. It's a big one. You got to remember when Joe Biden came into power, Joe Biden said, we're never going to deal with Saudi Arabia. Like, we do not want anything to do with MBS because he killed Khashoggi, the reporter for the Wall Street Journal.
Yeah.
And sure enough, because oil prices were getting high and Joe Biden was worried about inflation, about a year ago now, Joe Biden flew to Saudi Arabia to meet with MBS.
Okay, another one that I just thought of. Finland joining NATO.
Hmm.
Interest rates up or interest rates down?
Good question. Okay, let's think it out. Let's think it out together.
Yeah,
Finland joining NATO will likely upset Russia, could possibly cause more.
definitely upset Russia.
Yeah, so could possibly cause some type of aggression from Russia into NATO, which could then cause a response from NATO, which could then cause World War
War III, yeah.
which would definitely decrease interest.
Yeah.
Yeah, big time zero interest rate level.
Evisceration.
Yeah, could even eliminate central banks. I don't think it will, though.
World War III will happen? Or
No, I don't think we're going to see World War III.
So Finland joining NATO?
Down.
Down.
Rates go down.
Rates go down. You keep saying that there's so much going on in the world right now, which there for sure is. That, like, you know, we've brought up these little things and you're like, this might not, there's so much going on outside that it might not affect it that much or have a blip compared to all these other things. So what are these other things? Like, what is the thing
that's going on?
Yeah. Well,
Okay. So the thing that's going on is we spent like so much money to battle COVID. You remember COVID?
Barely.
Yeah. Okay. Well, COVID destroyed us.
Right.
Okay. By the way, I think I have a bit of COVID right now.
Sweet.
Yeah. Okay. Remember when Matt wouldn't come into the office because of COVID?
When I had COVID, you mean? And I didn't want to give it to people? Yeah.
Matt had COVID every 3 weeks.
You took a COVID test this Monday.
Yeah. For you idiots. Okay.
I was fine with it.
Anyways, listen, here's what I wanted to say. We spent so much money. The G7 nations spent so much money. Is that face because of how bad the coffee was?
Yeah, I'm just fucking.
Okay. We spent so much money. Like, for instance, Canada, the deficit in Canada was $600 million.
Right.
Okay. The deficit in Canada now is $1.2 trillion. We doubled the amount of our debt.
We went nuclear.
Can you imagine?
Nuclear.
Can you imagine that? So what does that do? $600 billion in a country like Canada pumped out into the economy. Same thing in the United States per capita. So how much money did they spend?
Yeah.
Trillions of dollars wasted. Okay. All of that money. And at the same time, interest rates at zero. So you could borrow as much as you wanted at zero. Plus there was free money coming in. Everything inflated in price. Everything increased in price. Mm-hmm. And we were simultaneously being told interest rates are going to stay low for a really long time by the central banks.
People felt rich.
So now all of that has to come out of the system in order for the system to even regain some form of health. And that action is so dramatic, right? Like, to go from the lowest interest rates ever for the longest period of time with the most amount of free money and pivot to the highest interest rates ever with no free money for an indefinite amount of time. That pivot is so significant. I don't think we will not realize how significant it is until we have a few more problems like the Silicon Valley Bank problem.
Right.
Where more problems are coming, for sure.
What do you think the next problem is?
Honestly, you don't know what the problem is until the problem comes, right?
Right.
But just think about, there are more financial institutions in a similar situation to what happened to Silicon Valley Bank. Like, that is not uncommon, right?
I have a question for you, Marcus.
Yes, Matthew.
So how much of this is like to blame on the Liberal government of Canada, or how much of this is like to blame on the typical financial policies that all G7 nations have? Like, is this a Canadian Liberal problem, which you'll often see on social media, or is this just monetary policy playing out over 100 years on all of these nations?
I think it is I think it's a combination of things. I think it's a combination of modern monetary policy, read the policy of the G7 nations over the past 20 years, 30 years of low interest rates, and not only just low interest rates, but it's this relationship between government and central bank and industry where, like, if something goes wrong, don't worry, we're going to come in there and save it, right? Mortgage crisis, tech bubble, mortgage crisis, real estate crisis. Like, every single time something is supposed to explode or go wrong, somebody comes in and saves it with words that we've never heard about before, like quantitative easing, right? Like, that was a new thing in 2008. Whatever it is. But what you're doing every time you do that is you're kind of just postponing the inevitable, right? You're not letting the economy function the way it should function. So it's kind of the can's getting kicked down the road. We're spending more and more money. We're mortgaging more and more of our future to get more and more money into the economy, to make the economy look better and better right now. Why? Because we only care about how to get elected in 4 years, right? The election cycle's tight. Make sure we continue to get elected. Also, wealth is like a barometer for a country's stability, right? Take wealth out of a country and watch how quickly social stability unravels, and watch how quickly not only you don't get reelected, but maybe you have a civil war. Like, issues come up, right? The more people are fearful and lack stability, the more problems you're going to have in a country. So this kind of all hands on deck, pay all costs in order to avoid this, has led us to a real serious problem. And we continue to elect the people who continue to lead us down this path, because we don't want somebody to stand up and tell us that we need to take some medicine. Like, who are you going to vote for? Are you going to vote for somebody that stands up and says, like, listen, like, we got a real problem. The Liberals just put a budget out to spend $500 million, which will increase our deficit by another, they say 40, but probably $100 billion. Okay. So, and we're going to increase taxes. Sorry. Right? The Liberals are going to do that anyways, but they don't really talk about it. You need somebody to come out and be like, listen, we got a real problem. Okay. We got to cut the amount of money that we're spending down, because we continue to go more and more into debt, significant debt. And we continue to eat up more of our gross domestic productivity just to spend to service the debt, which is a death spiral for our country. How is that sustainable? Explain to me how that's sustainable. I don't understand how that's sustainable. So you need somebody to come up and say, we need to change course. We need to reduce our spending. We need to try to stimulate the economy. We had an opportunity. I don't know if you remember this. Maybe you can try to pull a clip from our podcast when the pandemic started. But I made this suggestion, and I talked to my wife about it, and she thought I was crazy. That at the beginning of the pandemic, what we should do is we should try to build hospitals, like really focus on our healthcare system. And all of the waiters and waitresses, we should offer them, not just them, but anybody who had a job in an industry that had been like shut down because of COVID, offer them the opportunity to become nurses and like fast track the learning and give them their approvals so that we could end up with this like super robust healthcare system to deal with COVID. At the end of it, you would have actually ended up with, a
bunch of nurses,
maybe a hospital or two. And, they would be, it'd probably take us a little while to build them and get things moving. But like, you would have been left with something that your economy could hold on to, that you could keep, right? Like right now in this most recent budget, there's a ton of spending on healthcare for the provinces from the federal government, right? Like you can spend money, like we talk about where would you spend money in an economy, right? Like you want to spend money on things that will better your country in the future. Education, industries that are growing. I mean, okay, so like in this budget, they're spending a whole bunch of money on clean environment tech, but it's just aimless. It's just like, oh, well, the Americans are doing it. We're going to do it too.
Right.
Well, you talked about this earlier in the show where you were talking about spending money on a pipeline. The pipeline generates revenue. If you're spending money on infrastructure that doesn't generate revenue, you're going to go in the hole, right?
Mm-hmm. Well, it's not even infrastructure, right? You're just in COVID, you're just handing people money.
Exactly. And they're not building the infrastructure at all.
Yeah. Like the federal government increased in size by 30%. Employees for the federal government. We needed 30% more employees in the federal government. Is that what we needed? I forgot. I didn't realize that we were so underemployed in the federal government. Honestly, we need less government spending. And to think that like all of the spending that we're going to get in this budget is going to lead to less inflation. Inflation doesn't go down when a government starts spending more money, right? Government spends too much money, inflation goes up. Things inflate.
And rates go up.
And rates have to go up. So the federal government issued the budget, and then I bet you the central bank, the Bank of Canada, was probably like, oh man,
this is brutal.
Why'd they do this?
Yeah.
Well, I guess we're going to have to listen, I don't know. I think that the position that we're in, the G7 nations as a whole have overspent to keep their economies going, to keep their jobs, to stay in power, to keep things moving in the same direction, right? Bureaucrats, just red tape, move this thing forward. Let's keep our jobs. Let's,
When's the next federal election?
Soon, right?
It's soon, right? Yeah.
I feel like it should be
Didn't
soon.
he called one through the middle of COVID so that he wouldn't have to do one for a few more years, I believe, right?
Yeah.
All right.
So, Marcus, let me ask you again, because you were talking about how we kick the economy down the road. If you look at a trend of like the economy since like the Great Depression, it kind of is like horizontal until about maybe the late 70s. And then the trend goes up and up. There's dips with each recession, but the trend keeps on going up. If we let things break, like in the 70s and 80s and 90s, we let them, instead of kicking the can down the road, would we have been in a better place? And would have that...
We have let things break in the past.
Not to the extent of a Great Depression again, though, right?
Right. Well, the economic growth from the Depression till now has been more characterized by massive technological advances, right? We've had massive changes, upheaval in our economy happen, our technologies that led to this growth. Those future changes come from spending on education and, grants in, fields like AI. Like there's another one coming. It's called AI, right? More disruptive than ever though. And probably going to be a problem for Justin's job. But
You mean being on this podcast?
No, just like in general, AI is going to be very disruptive.
In mortgages.
For sure, in everything.
Yeah.
In everything. But what I mean is like at the first sign of a significant drop, the central banks have been all too ready to stimulate away the problems. And like we saw it on a smaller scale with this Silicon Valley Bank issue where like the Silicon Valley Bank made some mistakes in how they were running their business. Their for-profit business, they made mistakes. They were trying to make money. They were trying to make as much as possible for their shareholders, and they made mistakes. And as a result, they lost a lot of money. And their company was worth nothing. But they got bailed out. That's not capitalism.
Yeah, I feel like that shouldn't. I feel like that shouldn't happen.
It's not capitalism.
Yeah, if you screw up, you should be left with the.
Yeah,
you know what I mean.
So the more of that we continue to see, right? Like, and it's really weird. Like we saw it in the great financial crisis of 2008, 2009, where Lehman Brothers didn't get saved, but Bank of America got saved, right? JP Morgan got saved. Everyone else got saved. Just let's feed Lehman Brothers to the fire. Anyways, the more we continue to go down this path of like saving the things that go wrong, saving the people that tried to make too much money and broke something, well, we got to save them because it'll be too hard on the economy. Then the more we're kicking the can down the road. That's what I mean by kicking the can down the road, right? Like if you just spend money to fix things, eventually your money isn't backstopped or as worth as much, right? Like long-term economics, right? The more you just keep trying to spend your way out of a problem, the less your money is worth.
Like Hitler.
So let me ask you, what would you let break in the economy so that we could probably get back on track? Or what would you have along the last 30 years? You know what I mean?
Oh, that's a super easy question. Last 30 years only?
No. Well, you mentioned the last 30 years. So
I would just say, listen, I would just say that most recently, the biggest problem that our economy is facing right now all stems from the spending that happened for COVID. So, and our reaction to COVID. And I think hopefully we learned a lesson that if there is this virus that comes out, that it's going to go through the population. It's not just going to die.
Yeah.
It's not just going to it's not just going to go away by staying inside. Right? People are social creatures. We walk around, we talk to people. It's going to spread. And I think shutting our whole economy down and giving everybody money to stay home and telling everybody it wasn't going to impact the economy has been so toxic for our economy, and we're so afraid to talk about it. Like we really don't talk. Like you don't really hear very much in the media about like, oh my God, like this massive, horrible inflationary problem that we have right now is entirely caused by our reaction to COVID.
It's kind of like your uncle that got drunk last night and punched a hole in the wall. Like when he gets up in the morning, you don't really say anything about it.
Yeah.
You just like leave it and hopefully everybody just forgets about it. Little Jimmy fixes the hole in the wall and everyone goes about their day. We covered a lot of things in this past 50 minutes, a lot of things that would make interest rates go up and interest rates go down. And
the result of this podcast, neutral on interest rates.
So the only things that came up neutral today was this podcast and Kid Rock shooting a couple 2-4s of Bud Light. So awesome. Well, it was great to be sitting here with you, and we'll see you again soon.
Bye. Thanks.
Bye.